Even as the state struggles with education funding, the Senate Finance Committee this week approved a House plan to cut Oklahoma's corporate and individual income tax rates once revenue benchmarks are reached. The bill presented by Senate Finance Chairman Mike Mazzei would reduce the state's top individual income tax rate from 5.25% to 5%. Corporate income tax rates would fall from 6% to 5% once revenue collections are projected to grow enough to offset losses from the cut. Full implementation of the tax cuts in 2017 are expected to cost $200 million in lost revenue. Senator Frank Simpson questioned the numbers, noting the state did not suffer revenue losses after previous tax cuts.
And in fact, the dynamic numbers actually showed us a growth in state revenue.
I would just have to say, from a financial analysis standpoint, those cuts always occurred during general revenue growth cycles in a generally healthy economic period. This one has been put together specifically with these benchmark protections because we've obviously experienced a revenue decrease.
The Senate has already passed its own tax cut bill, which also contains triggers before it could take effect. A House committee is expected to take up the Senate bill next week.